going to start a series called From Novice to Trader, Navigating the Stock Market. We we will not finish it today. We'll continue next time, but we'll start. So again, this meeting is brought to you by Ivorian. And at Ivorian is actually a registered company in the state of Texas. And at Ivorian, we offer personal finance consultation, IT training, like for business analysis, data analysis, data engineering, business intelligence, and so on. And we also offer technical interview prep. Like if anyone wants to attend an interview, we prepare then. So you can reach us on ivorian.com if it's for IT training, but if it's for finance, reach us on ivorian.com/finance. You can also visit our YouTube channel, youtube.com/ivorianfinance. So let's talk about the main reason we are here today. We met sometimes last week when I introduced um, this group that I'm starting called Ivorian Investment Club. And it's a free club. The membership is free. I'm going to be talking about stock market. I'm going to be teaching, telling people how to trade stocks. But not just that, we'll talk about financial literacy generally, budgeting. We'll talk about some other kind of investment like CD, like money market, bonds, and so on. We'll talk about every one of them. For now, our meetings will be monthly. If there's a need to make it like every 2 months, that will be communicated. But for now, let's see if schedule will allow us to hold this monthly. Now, the next meeting will be on September 14th. After that, what I'm thinking of doing is that, because I want everybody to know like the next days of meeting. So maybe we'll pick a particular Saturday in a month, maybe first Saturday, second Saturday, third Saturday or something. And then everybody will know all the days of meeting. But if let's say something comes up, we're not able to host it on that day, would communicate the next time it will be held. But for now, we are holding today. The next meeting will be on September 14th. And um everybody here today has already signed up to be notified. For other people can still join us. Anyone that wants to join us, we need to actually sign up to be notified, to actually be a part of this group. One thing I would ask is that please spread the news. You know, there are people, I talk to people, and when I'm talking to people, I hear that some people have like, some people don't know, some people would like to actually invest, but they don't know how to go about it, you know. That actually, and for me, I have passion for it. In fact, I was talking to my, talking to someone a few days ago that like the kind of passion I have for this, like encouraging people to invest, encouraging people to have to manage their finances well. So one thing I would ask is that please spread the message, tell other people about this club, and please share the link to sign up with people, and I hope we can all grow together, we can learn things together. Now, having said that, I will not always be the only one talking. So if you have anything you'd like to share, please feel free to share. If you just want to share as we are meeting, that's fine. If you want to let me know in advance so that maybe we dedicate a Saturday for you to like teach us something, you know, if there's anything you know that we can all benefit from, we would like to to listen to you. So please let me know. We'll do that. So again, I won't be the only one teaching. And now, usually when you hear about investment club, people actually put money together and invest. We are not going, even though we call this an investment club, we are not going to do that. I will not take money from anyone. And I will not encourage anyone to take money from anyone. It's most of the time it doesn't end well. You know, what we're just going to be doing here is like talking about the strategies for building wealth, strategies for investing. We are going to do that. If there is a need to do things together, maybe we will do paper trading together. That will not involve money. Later on today, I'm going to talk about paper trading. So that's what we'll be doing for now. Now, so let's go into today's session. Let's again, the title is from novice to traders. So when we are talking about trading in this context, I'm focusing on stocks. There are other things you can trade like cryptos, yeah, but we're just focusing on stocks today. So when we're talking about stocks, stocks are securities that give people shares of ownership or equities in a company. You know, a single person can own a company, but multiple people can actually also own a company. When multiple people own a company, each of the people involved has a certain percentage or owns a certain percentage of the company. That is called stocks. When multiple people own, when they have ownership or equities in a company, that is called stocks. Now, the people that have equities in a company are called shareholders. So, what do we mean by share? Share is like a single piece of stock in a business. So, I have the picture of pizza here. You know how you get pizza, you have different slices, and multiple people can get slices. See stocks like that. Like you have a whole company, you divide it to multiple portions, and each person can get their portion, you know. And it could be millions. The stocks are standing for a particular company could be millions. Maybe one person owns like 20% of the company, you know. Maybe somebody owns just a single stock. It could be like that. Now, shareholders may be entitled to vote. Depending on the kind of stocks they have, they could be entitled to vote. But not every shareholder can vote. There are some companies that the shareholders are in different categories. Certain shareholders have voting power, certain ones do not have voting power. For example, if you have Google stocks now, there's class A, there's class C of Google stock. One is one has a ticker symbol of GOOG. The other one has ticker symbol of GOOGL. I don't know, remember which one. I think for class A, you cannot vote. For class C, you can vote. Or maybe vice versa. I don't remember. But I know for one of them, you can vote. For the other one, you cannot vote. Now, if you own a stock, the stock in a company and you have voting power, when there is, let's say there is a resolution they need to vote on, or maybe they just need to get some new directors they need to vote on, your stock your brokerage firm will send you the necessary details to vote. Now, so stocks are publicly traded on the stock market. So, let me describe stock market for you. Imagine that you have a market where people come together and they can like meet. Imagine like a flea market, you know, where people come together, they buy and sell things. Stock market is like that. But it's unlike a regular store or a regular shopping mall. In a regular shopping mall, when you go there, you pick up an item there's already a label for it. For the price label is already there. It's not like that in the stock market. The interaction between the buyers and the seller determines the price. So people or somebody that wants to sell stocks will come and say, okay, I have this units of stocks I want to sell. This is how much I can sell. The buyer will say, this is how much I'm willing to buy. If they can agree, then transaction will take place. If they cannot agree, one person will have to change. Either the buyer will increase the price is willing to pay, or the seller will decrease the price is willing to sell. So now I said that stocks are traded in the stock market. So stock markets include the New York Stock Exchange, NYSE, the NASDAQ, and the OTC. OTC is basically the full meaning of OTC is over the counter. So it's like a decentralized place where people meet and then they trade stocks. They basically bypass the NYSE and NASDAQ, and people interact with each other and they trade stocks. So again, before I leave this place, see a stock market as like an auction market. You know how, let's say you want to buy a car on auction, people will bid and the highest bid wins. It's similar. When multiple people want to buy, there's a bid that different people that will bid. Somebody may not be willing to pay a high price. Somebody else is willing, but the most important thing is that for transaction to take place, the price that the buyer is willing to pay must be equal to the price that the seller is willing to accept. And at the end, I'm going to give chance for question if anybody has any questions. If you want, you can put it in the chat right now, but when time comes, I will look at it and I'll be able to answer it. So, who are the participants in the stock market? Number one, individuals like you and I, everyday people who want to invest, people who they're looking for a place to put their money, Yeah. So those are the individual investors. Now, these individual investors can be beginners or they can be experienced traders. Another participants are the institutional traders. Or traders or investors, institutional traders or investors. So they are like banks, big banks, or some investment banks, some hedge funds, some insurance companies. They are the people that are able to pull large sum of money together to buy stocks. And it's possible for them to actually influence the price. Most of the time, especially most of the time when there is IPO, these people, the price that, and I'm going to talk about IPO is initial public offering. I'm going to talk about it later. When there is an IPO, the institutional price usually buy at lower price than you and I. So you hear that maybe a new stock that is coming up is going to open at, let's say, $30. You and I will not buy it at that $30. By the time it will first be open to the institutional investors. By the time that, okay, it's open to individual investors, maybe the price is like 40, 50 or something like that. Then we have the regulators. Those are the people, the bodies that regulate the stock markets. So like the Security and Exchange Commission, SEC. They just ensure that all the necessary practices are put in place. They ensure that the investors are protected. Then we have the corporate insiders. Those are like the CEO, the directors of publicly traded companies, or maybe even other employees. So let's talk about some key concepts when it comes to stocks. You will hear things like Dow, S&P 500, NASDAQ. Those are stock market indices. the stock market indices are basically the way the performance of the stock market is measured. How do we know if the stock market is doing well or not? That's the indices are they determine that. They tell of the overall performance of the company. So like an index like Dow Jones, you hear Dow, but the full meaning is Dow Jones Industrial Average. So Dow tracks 30 large publicly owned companies, blue chip companies. These companies are considered leaders in their respective industries, but they don't necessarily need to have the highest what's it called, the highest market capitalization. But these ones have to these ones are in Nasdaq, they're in NYSE. Then S&P 500, the full meaning of S&P is Standard and Poor's. So it's a market. It contains the 500 leading publicly traded companies. Now, again, it's not by the market capitalization. There are stocks that you see some big companies that may not be in S&P 500. I think it was in 2022 or thereabout that Tesla, I was hearing that, okay, maybe Tesla will be admitted into S&P 500. And a company can be in S&P 500 today, like later, the company may no longer meet the criteria. So sometimes the list changes. Now, you would think that S&P 500 should contain exactly 500 companies, but it actually contains 503 companies because 3 of the companies have 2 ticker symbols. Like earlier, I told you about Google having GOOG and GOOGL. So S&P 500 actually contains 503 companies. Then we have the Nasdaq Composite, which is like which contains 2,500 stocks listed on Nasdaq. So now the next thing, bull and bear market. Bull market is when stock prices, the general stock prices are in upward trend, meaning they are going up. That's a good a bull market. A bull market is something that every investor likes. Maybe you bought stocks at like $50 and it grows to like $100. Anytime we'll have like an upward tick in the stock market, especially when looking at the indices, that's a bull market. A bear market is the opposite. When there is a declining in the trend, when there is a declining trend in the stock market. Usually it's when the general stock market falls by like 20% or more. That's when you have a bull market. And the market never goes on a straight line. It's always like bull, bear, bull, bear, and so on. A lot of people say they can predict, but most of the time, like you hear, I've been hearing for more than a year that there will be recession, there will be recession. There hasn't been recession, right? But there still think that there are people that predict, but personally, I don't think that you can always be 100% accurate. There could be times you could be accurate, but not all the time. Let's talk about trading strategies. We have day trading, which is when you buy and sell stocks within a day. So maybe early in the morning, you look at all the stock market, you buy a specific stock, and later in the day, it goes up. Let's say you bought at $7. You could have bought, let's say you bought 1,000 units of it. And later in the day, the price increases from $7 maybe to $10, and you sell all of them. You have made you bought 1,000 units, you have made $3,000 in a single day. So that's what day traders do. They buy and they sell within a single day, hoping that they can make profits. So usually from short-term movement within a day. Then there's also swing traders. Those are the people that buy and sell stock within like several weeks, not day. You can buy stocks today, maybe in the next 1 month, 2 months, you sell it, right? So usually they capitalize on like the medium trend, not immediate trend, not short-term price movement, but like medium-term price movement. Then we have position trading. They are the people that like, I mean, it's the trading by taking long-term position, thinking that, okay, maybe over years or something like that, thinking buying stocks and keeping it for a long time with the hope that it's going to gain and you can make a lot of money. Now, in the very early days, when in those days when you people wanted to buy stocks, they will actually get share certificates, and I don't mean there's another term called share certificate, similar to CD. That's not what I mean right now. Meaning that what I mean is that people will actually get a certificate for the stocks that they have, that gives them the right for that stocks. In this day and age, you don't have to have a physical certificate. You buy stock through a brokerage firm. The brokerage firm takes care of all your positions. You still know you have an account with them. You know that, okay, these are your positions, these are the stocks you own. This is the what's it called? This is the number of units for each stock that you own. But the certificate and everything is not the responsibility of the brokerage firm that you buy stock through. In lieu of that, some of them will require you to pay commission when buying and when selling. But these days, $0 commission is now more common. Many stock brokerages will now charge $0, meaning you will not pay any commission on certain stocks, ETF, index fund. Now, there are many brokerage firms out there. I have a list of a few here that I know are good. I'm just going to give you rush through some pros and cons of some of these. If you need more information later on, I can send you information. So Weibo. Weibo, one thing I like them about is their chatting tool. They have excellent chatting tool. Charts are like chat lets you see like price movement, lets you see trends, how things are going, with the stock market. And their phone app is especially good. In actual fact, I've been using Weibo since 2021, I think. And it was just 2 days ago that I logged in on the browser into my account. I've always used it on my phone. You can do everything, trading, everything you need to do, you can do it on your phone. The app is good, and the extended trading hours, I'm going to talk about that later, but you can start trading stocks on Weibo as early as 2:30 a.m. I will give more information about that. They also have paper trading. I'll talk more about that. It lets you simulate trading. They have stock lending. When you own stocks, you can actually lend it out to people. There are people that short sell that again, I will explain that later. But with stock lending, you can make money, although it's a very small money, very, very small money that you can make. But one con about Webull is the fractional shares. Not all stocks on Webull have fractional shares, and their fractional shares is also limited. When you want to buy fractional shares, again, I'll talk about fractional shares later. When you want to buy fractional shares, they let you buy only at the market rate. You can't determine what price you want to sell it. That's one bad thing about them. Fidelity, excellent brokerage firm, zero trade commission on stocks and ETFs, low cost mutual fund. You can also have fractional shares, great mobile app. They also have stock lending, you know. Now, one thing I like about Fidelity is this. If your workplace offers retirement account, 401k, 403b, and so on, and they use Fidelity, you will have, if you also use Fidelity to buy stocks, you have both your personal investment account and your retirement account in one place, and you'll be able to manage them. So that's one good thing about Fidelity. The con about Fidelity is they have a tool called Active Trader Pro, which is a uh, like an application that you can install on your computer. You see the market trend, you can buy stocks there. Sometimes once in a day they recommend one stock per day. They will tell you, give you the information about the stocks, they will tell you why you should buy it and things like that. It's a great app. But if you want to do paper trading, if you want to simulate, you want to learn about trading, you must use Active Trader. You cannot do it on the browser. You cannot just do it on your phone, the regular Fidelity app. You have to use the Active Trader. TD Ameritrade have a selection of mutual fund, but they do not, as at the time I last checked, they did not have cryptocurrency trading. Webull, Fidelity, you can trade cryptocurrency, but not Ameritrade. E-Trade, you can have IRA. They have comprehensive research tool. If you're trying to determine what stocks to buy, what stocks to sell, they have comprehensive research tool. But their margin rate is high. I will talk about margin later, and they don't offer crypto. Charles Schwab, they also have fractional shares. They have research tool, but no cryptocurrency. Robinhood. A lot of beginners use Robinhood. They say it's user friendly. It has fractional share, zero trade commission, but they don't offer IRA, and customer support is only on email and chat. Now, I'm not going to tell you what tool to use. You can use any one of these. You can even use other ones that I don't have here. One thing I will tell you is, before you select a stock brokerage to use, do your due diligence. Do the necessary research. I will advise you, when you go on Google Play or Apple Play or whatever they call Apple this thing, check the reviews. Check other people that use it. Check what they have to say about it. Or maybe if you have friends that use the app, ask them what they think about it before you use the app. I signed up for Robinhood. I looked at the review and I thought that, okay, this is not for me. So I've never used it. I've signed up more than 2 years. But again, I have people that use Robinhood and it works for them. Maybe it's just not for me. So just do the next due diligence. Now, before we leave, one thing is this. You may want to have multiple apps, because as you can see, they have their pros and cons. For me, I have Fidelity, I have Webull, I have Charles Schwab. So it's always good to have at least two. Now, even though I said I like Webull, I've heard people complain about Webull that maybe it's not good for beginners. Maybe it has a steep learning curve. It doesn't so for me. I like it well. So again, if you if let's say you try one, if you don't like it, you can always discard it. If you already bought your stocks there, you can always sell and yeah, and change to another one. But it's good to have two. Now, before I leave, just a moment on Webull. Again, what I'm about to say, don't let it determine whether or not you use Webull. You do your due diligence. Now, if you decide to use Webull, I have a code that you can use. If you use the code both you and I will get stocks. They are just small distinct values between maybe $2 and $5 they will give you to, but don't let that be the reason you will use Weibo. If you want it, if you're interested in the code, please reach out to me. I will send you the code, and again, you and I will get um stocks. Let's rush. Time is going. So you want to start trading. What are the steps you need to take? Now, I have these steps and I have arrows linking them. They don't necessarily have to follow this order. And in actual fact, it depends on the brokerage app you want to use. So they may not follow this order. Number one is you have to determine the securities to buy, meaning the stocks to buy. Then you say set the order type. I'm going to talk about order type shortly. You set the limit type if there's a need for that. Determine what quantity of the stocks you want to buy. Then set the trading hours, whether regular hours or extended hours. Then set the time in force. Time in force could be day or good to cancel. When you set it for day, if let's say you want to buy a stock for like $5, you set it that you should buy it for $5. Let's say it currently is trading for like $6. If it never drops to $5 today, your order will be cancelled because you have set it for day. But if you set it for good till cancelled, it will stay, the order will remain in place if for 60 days. If the price does not drop to the price you have set, after 60 days, it gets cancelled. But if it drops to that price, then the transaction will go on within 60 days. So other types, I talked about setting after you determine the stocks to buy, you set the other types. Now, the other types depends on the brokerage. They call them different names. So you could use an app that has names different from the names I have here, but you will get the general idea. So we have the limit order, and limit order could be a buy limit order or it could be sell limit order. For buy limit order, you set a fixed price that you want to buy a particular stock. The transaction will go on at that price or lower. Again, let's say a stock is trading at $6. If you set the buy limit for $5, if the stock drops to $5 or lower than $5, the transaction will be initiated. If it doesn't drop, the transaction will not go on. For the sell limit order, you want to sell a price, you set at a price or higher. So let's say you sell set for $5. If the price is lower than price dollar, the transaction will not be initiated. If it is 5 or more, it will be initiated. Then the market order, you don't determine what price the stocks will be bought. It will be bought at the current market price. For me, I almost never use market price because if you are thinking that it's trading at $6 now and you think that okay, you want to buy, you think you are going to buy at that $6, anything can happen. And between the time you set it and finish setting everything, the price could have risen. And then maybe it's now 6.5, maybe $7. It always buys for you at the market dollar. Again, a market order, market price. It's not necessarily bad. It's just I just don't use it. I always set the price at which I want to buy or sell the stocks. Then you have the stop order. For the stop order, you have the buy. So you set a price that you want to buy the stocks. If the latest price rises to the stop price, then a market order is triggered for the stop price. For the sell price, when you set a price at lower, when it is currently at lower than the current price, if it drops to the price that you have set, then the market set order is triggered. Now, What's the purpose of having stop orders? And I'm going to talk about stop limit order right now. They can help protect your assets, especially for the sell one. If you are trying to maybe not run at loss, that will be a good tool to use. And also, and one strategy that people do is use is that they determine what price they are buying and what time price they will sell later. They can use the stop order to do that, so that once it reaches the price that they want to sell it, it initiates automatically. Then you have the stop limit order, which is similar to, it's basically the same concept as the stop order. The main difference between stop order and the stop limit order is that for stop limit order, when the price is reached, the limit order will be initiated. Unlike stop order, when the market order will be triggered. So that's basically the same price. So both of them, for both buy in the stop order and buy in the stop limit order, you set a price that is higher than the current price. For both sell under stop order and stop limit order, you set a price that is lower. Sorry, I wrote lower. It should be lower than the current price. But for stop order, market order will be triggered. For stop or limit order, the limit order will be triggered. I have to rush. So what are some stop trading times? Market hours. You cannot buy stocks 24 hours. The regular trading hours is 9:30 a.m. to 4 p.m. Eastern Time, Monday through Fridays. Holidays are observed. When there are holidays, stock market will be closed. And certain days they can close early. Maybe like the day before Christmas, Christmas Eve, they can close like 1 p.m. So just take note of that. But we also have extended hours. So if you work and you know that between 9:30 and 4 p.m. Eastern Time, you are not able to trade, you can actually trade during extended hours. You can also set something that will be triggered during the regular hours. So the extended time varies based on the exchange. For the New York Stock Exchange, there are like 5 different markets within New York Stock Exchange. Some will open at 2:30, some will open at 6 a.m. For NASDAQ opens at 6 a.m. So you have the extended hour. For extended hour, you have pre-market and aftermarket. For pre-market, it could be, depending on the exchange, it could be between 2:30 and 9:30, or it could be between 6 a.m. and 9:30. Anytime before 9:30, that's the before market or pre-market. Then you have aftermarket, which is from 4 p.m. Eastern Time to 8 p.m. Eastern Time. Now, one thing you need to note about extended hours is that the demand and the supply will be limited during that time. You can set something and you may not find a buyer, or you want to buy something, maybe there's no seller for it. It could be demand and supply is low. But it's very good for when there is a news. Let's say after hours, a particular company declared earning, and they surpassed the expectation. By the following morning, the price is going to go up. You can quickly buy. Or let's say their earning is lower, you can quickly sell. So it's good for something like that. Now, fractional shares will let you buy less than a single unit of of stocks. Imagine, like, let's say 5 people dividing a single unit of stock among themselves. So it's good for stock that are very expensive. Let's say a unit of stock is like 500 now, and you are not able to afford it. You can buy fractional shares. You can buy as little as like $5, $10 uh, of fractional shares. But not all brokerage apps let you buy fractional shares. And sometimes when they do, or when they let you buy, there could be some restrictions. like maybe you have to buy at market price and so on. Paper trading. Paper trading is basically simulated trading. Like you trade as if you could trade at the regular price, but you are not actually putting money there. So it's good for people, for beginners. You are just starting to learn how to trade. You want to actually try paper trading first. Determine some strategies that work, some that don't work before you actually start trading. Then ask and bid. Ask is the selling price that somebody is willing um, to offer to sell their stocks. And bid is the price that a potential buyer is willing to offer to buy stocks. For a trade to be initiated, the ask has to be equal to the bid price. If the ask is not equal to the bid price, somebody has to adjust. Maybe the buyer has to increase their bid. Maybe the seller has to reduce their ask. The exchange, just like I mentioned, New York Stock Exchange, NASDAQ earlier, it's a marketplace where investors and traders buy and sell stocks. Other stock time is going, I'm going to rush, or maybe some of the things I prepared for today, maybe we'll leave them for the next time. Other stock trading stands dividend. It's basically a portion of a company's income or profit that they divide among the stockholders. So when a company makes profit, they divide the profit among the shareholders. So you get dividends. Not every company pays dividends. Some companies will reinvest the profits back into the business, but some actually uh, uh, some pay dividends. Then there is IPO, initial public offering, which is the first sale of a company stock. You have a private company, you want to take it public, you do that through IPO. Now, I will advise you to be careful with IPO. You don't know the issue of the company, you don't know the issue of the stocks of the company, you don't know how well it will do. So you may buy stocks, IPO now, and then 2 days later, the price goes down a lot. I used to buy IPOs when I started trading stocks, and most of them did not endure, especially EVs. So I stopped buying IPO. IPO is not necessarily bad, but for me, I just prefer to buy stocks that I've studied for some time. Margin is basically borrowing to trade stocks. So you want to trade stocks, you don't have enough money to do so. You borrow to trade stocks. When you trade stocks, whether or not you make money, you pay a particular commission. You would have agreed on the commission before you get the money. It's as if you are going to the bank to get a loan to put in stocks, which I would never recommend. Well, I'll talk about, maybe next time, I'll talk about mistakes that beginners make in stock market. One thing, never go to bank or borrow from anybody to buy stocks. Never, ever, ever do that. But you can borrow from the brokerage firm to buy stocks, which is called margin. But again, whether you make money or you lose money, you pay commission. Stock splits. There are times, because for some companies, the value of the price, the stock has gone up a lot. Many people are not able to afford it, Because of that, some stocks will do, some companies will do stock split. So let's say their stock is trading at $100. If they do 10 for 1, now if you have a single stock, you will now be given 10 stocks instead of a single one that you have. And the price will now go down from the $100 it was initially to $10. So the total value will still remain the same. It's the unit will increase, but the total value will remain the same. Then day trading, I already talked about that. I will not repeat that. Options. Option is the right to buy or sell an asset at a price and at a given date. So you can do that when you know that, let's say a stock is likely to go up. So you already buy options now. Even if the price of the stock goes up, you still buy at the price that you have already agreed on. You pay a certain commission to buy options, but at that date, you have the right to either initiate or to buy or to not buy, but you must have already paid the commission. Short selling, it's basically borrowing stocks to sell at high price. Meaning the price is high today. You borrow stocks from people that own stocks. You sell to them and you believe that the price of the stock will go down. So you borrow stocks today, you sell at the current price. Let's say the current price is $100. If you are right, the price goes down to $70. You buy it back. You buy it back at $30 instead of the original $100. You have made $30 on that stocks that you bought. That you sold and you bought back, right? Out of the $30, you give commission to the people that gave you the stocks and you keep the remaining. So remember, I talked about stock lending earlier. I will talk about it more. That's when you actually you lend people your stocks. They go trade with it, they go sell the stocks, they buy back at lower price, they give you your stock back. The good thing with the stock lending, even if you lend your stock buyer out, you can still sell it. Now it's already 11:52 Central Time. I still have a lot of things prepared. I think I'm going to stop. I told everyone that we will not go beyond 1 hour. I want to keep to my word. So I'm going to stop here. Next time we'll talk about dividends. You know what? Let me take 2 minutes to show you how to trade stock, then I will give you homework. So I gave you some steps to trade stocks. I said you determine the stocks you want to buy. This is Webull web app, by the way. So later on, I'm going to pick one, maybe Webull, maybe Fidelity. I'm going to show you the interface, show you different things. But now let me just show you how to buy stocks. Determine the stocks you want to buy. This is paper trading, by the way. So let's say you will want to buy Microsoft. I have Microsoft here, but if it's not Microsoft, just type the stocks you want to buy. Let's say I want to buy Apple. So right now I see the chart of Apple. I see the price, I see volume and everything. Then I can buy, I can sell. You determine what you want to do. If I'm buying, I determine the other type, whether I want to set the limit at which I buy it, or I want it to be market stop, stop limit, trading stop, and so on. I determine, so I just want to use limit. I determine the quantity. I'm going to sell 10, or let me sell 50. Since I want to use limit, I have to set the limit price. The current price is 226.05. I want to buy at 226. The transaction will not be initiated immediately. It will only be initiated when the price drops from 226.05 to 226. If the price keeps going up, then the transaction will not be initiated unless it drops. Then I set the timing first. I have the option of day or GTC. GTC means good till cancelled. If I set day, if the price never drops to 226 today at the end of the regular market today, this transaction will be cancelled. If I say go till cancelled, if it does not drop to this today, I have up to 60 days. If it never drops within 60 days, it gets cancelled. So you determine which one you want to use. Now, do you want extended hours? If you say no, after 4 p.m. when the market closes, if this transaction has not been initiated, it will be cancelled. But if you want it initiated during extended hours as well, then you can pick yes. So it will not be cancelled at 4 p.m. It will still remain, the order will still remain in place till 8 p.m. So you have more hours to buy. So after you've set all of those, then you can click submit. But again, this is just a simulated trading. This is not real. So now I submitted it. I have it set here. I can cancel it. I can modify it. I'm buying 50, but no, you can say field quantity over total quantity. There are times that you can set a number of units and the price has reached that price, but they don't have enough volume. They can fulfill a part of the order. The rest will be fulfilled later. So right now, 0 has been fulfilled. This is the time I set it. I did not set stop price, so nothing here. We have some other ones. So I placed the order today. I include extended hour. So this is just, we will talk more about this. Oh, somebody raised their hand. Brother Samuel, you can go ahead, please. Who is Samuel? You can unmute yourself and ask your question. Oh, hello, sir. Yes, ma'am.
Are you hearing us?
Can you hear
I can
us
hear
now?
now, sir.
How can you make it bolder so that we can see? I know this graphic thing is somehow for us to really understand here. Okay. Yeah, I think it's a little bit better now. Yeah.
Okay.
Thank you.
You're welcome, ma'am. Welcome, sir. Okay, we are going to stop here today, even though I still have a few things. We can go over that next time. Next meeting is September 14th. Since everyone who has registered will get an email reminder, and please share the news with everyone, with other people that may benefit from it, from this program. So, any question? Anything that we have 3 minutes? Anything that anybody would like, or any question you would like me to answer, or not just questions, thoughts, anything you'd like to share?
Oh, thank you, sir.
You're welcome, sir.
Sorry, thank you for the lecture. You talked about the indices the other time.
Yes, sir.
DOW, all those, and
Yes,
it looks like yeah, I didn't really get it. What's the significance of this? I used to see that thing. It look like Greek or Latin to me. So
yeah,
I just need to get more understanding about that. Then the other thing is maybe after next lecture, you put us through how we can signing up for our own app to be able to start looking into, get familiar with the app for paper trading.
Okay. Okay.
Or will it be too early?
No, it's not too
after
early.
next lecture?
No, it's not too early. You mean next time or today?
No, maybe I'm talking of maybe after next lecture.
Yeah, it's not too early. In actual fact, I was thinking of giving you your own work today for people to go buy S&P 500, but I was making an assumption that people already know how to sign up. So that's actually a good point. Maybe next time I will show you how to sign up. You know, yeah, I can do that, and then I will wait until then before I give you homework then. Okay. So back to your first question, sir, about the indices. The indices are just used to see the market trend. I talked about bull market. I talked about the bear market. How do you even know that there's a bull market? How do you know there is a bear market? You know by looking at the general market trend. So some indices have been created that will tell you what the general market trend. For instance, you can hear that, oh, maybe there's something, you hear something like sell-off. That's when everything is just red. People are just selling their stocks. So how do you even know? It's when the indices are going down, you know that something is happening in the market. The general prices are going down. But when the indices are going up, you know that the general market is going up. And if I remember correctly, I think it was during the Trump presidency that Dow reached 30,000, and it was what I said 30,000, 3,000. It was, let me see if I can just pull it up. Dow So you can see, yeah, it was 30,000, not 3,000. So this tells you as this like as it dropped now, you know the market would have dropped. The general market. So this is actually not a stock in itself, although we have like Nasdaq stock, ETF, and things like that. So this is just showing you about the general market. This value, this does not mean when you see this value 40,000, that's why you don't see dollar there. It doesn't mean that you can go and buy this. You cannot buy it. This just shows you like the market. You can see, let me show one here. Okay, you can see that it increased from like 34,000 to like 40,000 here. That means that in the last 1 year, the stock market has been doing good. That generally the stock market has gone up. So basically, like I told you earlier, we have 30 companies in Dow. This is like the average of those companies, the average price of those companies. That means those 30 companies, this is the way they have performed. So it's the same thing with S&P 500, which is also an index. It also shows you that, okay, this is the way the market has been moving. So again, it's used to track the performance of the general market, even though for each index, only certain companies are part of it. Does that make sense, sir?
Yes, sir. Thank you, sir.
Okay. Any other question? It's already 2 minutes past our time. Pastor Shodi, you can go ahead, sir.
Yeah, I have a question. Thanks so
Yes,
much. I wanted to find out, are we going to learn forex trading on this in this club?
No, sir.
Okay,
I don't do forex and
okay,
cryptos.
you don't do forex. Okay.
Yeah.
All right,
Yeah.
that's just
But one thing is this: if we have somebody in our midst that knows forex, and if the person is willing to teach us, you can just tell me maybe we'll have one session, we'll have one day where you teach us. But I don't do it, so I'm not qualified to teach you that.
All right, okay. Thank you.
You're welcome, sir.
Bye.
Any other question before we end the session today?
It looks like some people have their hands up.
Yeah, those are the people I already answered. So
Okay.
we can, yeah, thank you. We can lower. Okay. All right, if there's no question, I hope you learned one thing or the other today. And I hope you join again next time. We'll continue with some of these things. I'll show you how to sign up, and then you can start trading. As time goes on, maybe we'll have a platform where we can communicate apart from email. It could be WhatsApp, it could be maybe Slack or something where we can share ideas. If let's say I buy something, I think it's a good idea for you to buy it, I can show you. So that will be communicated. Again, please share the link with other people. All right. Thank you, everyone. Thank you for joining us today. Hope to see you